Good day, guys. I hope you guys are doing well. It's been a while, but I'm back again for another big jam. Understand? So today we'll be talking about weekly range expansion and how you can capitalize on this. For anyone who is actually interested in weekly expansion, daily expansion, and direction, I think this is the best video you would ever come across. As you know that majorly I focus on weekly range, daily range, and monthly range. Another thing I would like to advise is no matter the position you find yourself, make sure that your strategy looks simple. Make it as simple as possible. Never make a strategy complicated, don't make it hard. The fact that it is hard and complicated does not make it more effective. Do you understand? You need to have a strategy that is actually easy for you to show up for, to be consistent with, right? Because you have a lot of emotional issue that you are even working on. Now, strategy, you can actually make that easy for yourself. The emotional issue is not really something you have full power on. Sure you get so, but strategy you have power. Anyhow you actually want it to be is what you actually make it be. So don't ever make your strategy complicated. So here now is a quick strategy on how to understand weekly range expansion and how to capitalize on that. This is going to give you a lot of money, especially if you have the mentality to hold trade and also you have the mentality to be consistent with this trading strategy. So now let's get into, and after this video, I'm going to explain the breakdown of my last trade, which I promised to make a video. So after this video, I'll just quickly cover that and we can move on. So first of all the first thing you need is a draw on liquidity and the current price action. If you look at this, we can see that the market looks bearish, and looking at the information that we had here, we've seen the market was able to take the uh this 2023 all-time high, which is actually eventually this high. So when the market took it, we've seen the market reacting. So the first thing I need to mark is the breaker for this high, the breaker that actually took this high. There's a lot of breaker on this line, but there's one particular breaker that is responsible for this high. And where is the breaker? It is this breaker. So which means that I'm marking down this particular level because this was the last sell before this high was taken. Let's try and put an horizontal level here. You can see it. So before all of these breakers started forming, this was the major breaker that actually responsible for this high. This is the significant high. This buy again, though people might consider this as a breaker, this is not a breaker. This is the really breaker. There's nothing that this one actually did. It's actually within this particular high, that is after the liquidity has been grabbed, the market is trying to give structure to go back. So this is not the breaker. The breaker is this point, because this last down close is the one responsible for this high. So you mark this particular level and you wait for market to get there. You know that the way I usually trade is that I'm focused more on the candles, right? So when market go here, we had the break below this, and we mark this out as breaker block, and we have the fair value gap inside of this level. Can see it. So when market enter the fair value gap, you wait, and this particular week, market was able to close bearish. So simplifying that, yes, we are actually going bearish. So ideally, how I trade is after this close, I'll be anticipating the next week to be a bearish world expansion. And where we are going is very far, is this low, but for next week, as This is like what I would be anticipating first. Do you understand? If you look at this price action, you will see that there is no magic that is going to happen here. We've seen this, and we know that we are coming low. So I'm being understanding that we're actually coming low. I'm still not greedy. Where I actually pick as my first draw is still this particular low, obviously. Right? So we've had this price action, we had the swing high at this level. We have the swing high mitigating the what the breaker block. So we have this after we have this formation already. So I'm anticipating the next candle to be a bearish candle. How do I trade? Understanding the weekly range expansion. This is something I've explained before. If you are trying to anticipate a weekly candle, then we should understand that on Monday, you will see market consolidate. So the candle might actually close as bullish candle, and on Tuesday, market will go above it, right above the Monday high consolidation. The market will then start expansion from there. So that is why most of the time we always say Tuesday will form high of the what? High of the week. Because we know that Monday might come as consolidation, and on Tuesday we see market go above the consolidation, market will start dropping from there. So this is like the same thing we'll be anticipating. Understand? So now understanding this, um, you see, this is what we have, and apart from what I explained now, we need to understand this price action. The first thing is draw on liquidity, and the first draw on liquidity was this fair value gap. And the fact that market was able to draw there, and we've seen the market showing sponsorship to the downside. Right now, we have this swing high. So the next draw on liquidity that is very obvious is this low. There's no any other magic that can happen. The next draw on liquidity is this particular low. If any magic is going to happen first, the market will have to get to this low first before we see the magic. Maybe market wants to start buying back. First thing, market will get there. So now, moving to daily time frame, this is what we have. This is how the candle closed. This is Friday close, which means that the first thing we can think of is still the what? Is still the fair value gap that is available here. And what did I say about the weekly range expansion? How can you actually form? That is the Monday, there's chances that the market will close bullish. And now that we have a fair value gap here, so we are expecting 5 candles, right? So we expect one to be bullish and the second one to form the high, and the next candle, the most important candle is the Tuesday, Wednesday, and Thursday. Friday candle might actually close or opposite as what as a redistribution. Friday close bearish here because the market took time. If you look at here, Monday, Tuesday. So the expansion started on Wednesday, and before it started on Wednesday, the market still went above. So there's a lot of manipulation that was done earlier before the expansion. So they had to use the remaining 2 days to expand. So, but ideally, an ideal weekly expansion, Monday, Tuesday, then Thursday and Friday. I mean, Wednesday and Thursday, Tuesday, Wednesday, Thursday, you get your major expansion, which is what I'm anticipating. And we have this year. So, since we have this year, let's see what happened next for now. You can see that the we have the Monday candle close bullish, which is like what we actually anticipating. And the way Monday candle close bullish, you can see that even during the day, market was actually buying. It's not like they entered this fair value gap early, so they close inside the fair value gap like that. So ideally, Monday's high is going to be used as liquidity for the whole expansion, which means that on Tuesday, you want to see the market come above Monday, close up the fair value gap, and start selling. Do you understand this? As a matter of fact, it's something that you can decide to sell and put your stop loss above you, because we are able for you to have waited for Monday. That means you've already reduced your whole risk. So it's a thing that you can sell and put a stop loss just slightly above here. So let's now wait for Tuesday, which is going to form the high of the what? High of the week. So if it is something that you can trade on that Tuesday, or you wait for Wednesday to trade. So most time you can get entry on Tuesday, right? And sometimes your entry might be on what? On Wednesday. So now, if you want to trade on Tuesday now, let's just move to like H4. Let's see if there's any reasonable thing you can consider H4. Okay, we have this. Why did I mark this before? Let's check daily time frame, because it's actually confluencing with something. Okay, this is the complete gap of the daily time frame. Let's go to 4 hours, and we have this gap on 4 hours too, which is actually mitigating a bearish order block. So let's say our Tuesday, you can anticipate, since market closed like this on Monday. So you know that on Tuesday, the market will still want to do some consolidation, the market will want to start. So on Tuesday, you can actually sell from here and put a stop loss above here. Then you wait for the what expansion to what to our draw on liquidity. And looking at low here, it means we have high impact news, right? We have high impact news that is going to support our what expansion for that particular week. So ideally, this should be our what? Our entry on Tuesday, because we know that Tuesday is going to form the high. So if market was able to open and get to this particular high on Tuesday, then you can start selling. So, but then let's go to 1 hour to see what is going to happen on Tuesday. So let me play it. So market has opened on Tuesday. Let me increase this thing so that, yes. So market has opened on Tuesday, and market has completely filled this thing, and it has completely filled the 4 hour. Like I said, it's either you already sell from this fair value card and put your stop loss above. So let's assume that you're already selling. Maybe after market open, you see the market started consolidating, then the market move above Asian, which is actually our point of interest. So you can look for a sell here already. I look for your sell, your stop loss should be above here. So let's see what happens next. So eventually, this was our market closed. This was our market closed on Tuesday. But market was able to actually take the Monday's high. This is Monday's close, right? And our anticipation for today's is what the Monday's high to be taken and Tuesday to form the high. So now Tuesday has formed this particular high inside of what? Inside of the 4 hour fair value gap that we're anticipating. The market did not deliver them, so which means on Wednesday should be our delivery time period. So the same thing you are going to do, the same thing you did here at both Asian is what you are going to do here too. On so let's see what happened. Good. Market was able to go above Asia, and at what time? This is true. So the best time to look for entry. This I'm only explaining this for people that will actually want to get uh a more tighter entry. On a normal day for me, I might not actually go this low, except I'm trying to leverage on the trade. Otherwise, from that 4 hours, that is where my entry is going to be and my stop loss is going to be. So all of this drama would not be my business. So I'm just trying to explain the whole price action and how it played out. But for someone that wants peace of mind, on Tuesday, immediately market takes daily high, take your trade, put your stop loss and leave the rest to work throughout the week. If you're trying to look for a better way to slim your entry, to have a better entry technique, that is why you want to put the idea of time and price, right? So now we have this market, this is 2 to 5, which is where you should be expecting your trade. Definitely 2 to 5. Then you can see by market took the high. So it's either you're already selling at this high, or maybe you waited for break of structure and you want to be selling at this rejection block. Let me move it. This rejection block. Ideally, see that it's still within this range. Although if you are selling here, your stop loss will still be above ID. This is your invalidation, right? This is your invalidation normally. So your stop loss should still be very high from here, to be very high. So you can then look on Tuesday, on Wednesday, and see what you have. Which on Wednesday, this was Wednesday straight, and market continue on this is Wednesday, and this is where Thursday. Let's see. Okay, so this was Friday, which means that market has already delivered to this particular low. Now, if we go to daily time frame, you can see it. You can see it on daily time frame very easier on daily time frame. You can see that when after this fair value gap, Monday, then Tuesday above this high is where you are selling your stop losses here. Then wait for market to deliver to this low. So on Tuesday, we had the high of the week, yes, and on Wednesday, the expansion drop, and on Thursday, the expansion drop, and on Friday, market took the low completely, and Friday as what redistribute is distribution. So that is how you anticipate weekly range. So if you go to the weekly, you will see how the candle will close. You can see it now. Weekly range expansion, you can see it. So market was able to trade inside the previous week range. Then from there, we had the market strike to this particular low. So directly from that 4 hours to this particular low is a lot of money. That's 230 pips in a week. Someone who is patient enough to trade and look for a good strategy is the best strategy. So one thing I always advise is look for a market that is already approaching low on liquidity. That's all. But approaching low on liquidity on higher time frame, not lower time frame. On the weekly, on the monthly, on the daily, and you have this pattern. That is all you need. That is all you need. So that is about that. And always remember this structure. This is it. For every candle you are trying to anticipate, it could be Monday, it could be daily candle, it could be weekly candle, it could be monthly candle. This is the pattern. From weekly, this will be Monday and Tuesday, take the high, and from Tuesday, Wednesday, Thursday, and Friday, you see the market might reject. And when you come back to the weekly, this is what you get. So for someone who does not like stress, take your entry on 4 hours. Do you understand? For someone who wants a tighter entry, or you want a precise entry, you can move to 1 hour. Use the confluence of time and price, just like I did. Take the entry at the what? At the exact time. You understand? Take the entry at the exact time. If you look at this timing too, let's put it there. You should this timing for our second entry is what? You see 2 to 5, and there's 2 to 5. It was actually the first, this was a 5, which is what our entry. But after break of structure, return back, and market stood from there. So even this sale actually started from in New York. So 2 to 5, market was actually still retracing back. So after New York 7, that is when the market will start. That's why sometimes market will already be at your PO high, but market will not drop because it is not yet time. So market might just consolidate at that entry point until New York time, the market will start dropping. And obviously we have news events here. So this particular one is just another mitigation from this particular low, which was actually the real world breaker. This is actually the real breaker. Do you know why? Because this is like the last sale before this daily high. You understand, like daily high that was taken that we used to consider what is it called? Um the liquidity, which was daily high. So this was actually the low that took, this was the last sell before market took all those low. So everything that happened here, this is the real breaker. So if market return back to that real breaker, continue to sell just like market did here and market did in the bigger picture. So that is how to anticipate a weekly range expansion. Look for a market that is already approaching what? Drawn liquidity like this. Then you are good to go. Look for a market that is already approaching what? Drawn liquidity. Then wait for a swing high to be formed. Then once swing high form, work on a what? A candle in one candle, just one weekly candle. Anticipate it to the low. Then once market get to the low, so what we are interested in is the expansion. So there are times that you might anticipate a bearish candle and market will close bullish. Why? Because market has already done what it's supposed to do for that bearish candle you anticipated. For example, the bearish candle I'm anticipating is actually from here down here. So if once market deliver down here, that is my TP. So the market might deliver down here and we have another retracement. Do you understand? So that is what is important. Understand what is going on. You see, this is the breaker block, which is just like the same breaker block that took this particular high. So there's difference between my home breaker block and the general breaker block. And I just explained it to you. Something that you just need to backtest and you will see more of it. So that's about that. So let me release the charts and quickly do a breakdown of my last week trade. Because people have been asking me to make the breakdown. So basically, this is it. This is it. This is the weekly, and this is the daily. So I was bullish. Ideally, what I was actually looking for, my bullish, this is where my expectation is before the sale. And there's still chances that market will open on Monday and may take some liquidity below and still market return back to this high. So this is ideally, this is my point. So now, what is my expectation is that the same thing, I was bullish for that particular week. So this is on Monday. This is on Tuesday. Ideally, Monday, we didn't expect market to quickly buy on Monday, but it did, which means that the manipulation will take time again. So since market bought on Monday, then we have Tuesday was actually bearish. So Tuesday coming to be bearish is like a big opportunity for me. It's like, what am I going to? It's like it's something that uh like a mistake in that algorithm. But because me, if I'm trying to look for a buy and one candle now go and close bearish. One can now go out. That is the only time you can anticipate turtle soup to be the best entry and the best trading strategy you can anticipate. You can trade at that particular moment. And when you're expecting market to be bullish, and market now give you a full daily candle to be bearish. The second day, all you need to do is the low of that candle. Once market get to the low of that candle, my brother, take your entry. Take your entry straight up. That is why I was able to do what I did here. So I think I used like five lots. Is it five lots? Yeah, that's 10 postmates. So at this particular low. So on Tuesday was bearish. Ideally, Monday was supposed to be the bearish, then Tuesday, but then the fact that market is actually in consolidation, you can see the pattern that was happening. You can see the pattern, see the pattern, see the pattern. So it's quite understandable that Tuesday and Monday was bullish and Tuesday was actually bearish. So maybe Tuesday was bearish. The low of Tuesday is actually where my entry is. This one I did not even do anything like waiting so much. I did not. So the market took the low, right? Market bought and gave break of structure and what the fair value gap was where my I put my entry. And there was actually an impact news. So put my entry here. It's a signal that I sent. Right? The signal that I sent. Where is my share? So this is like the entry. This was after I took partial. You understand it? So let's go back to the normal chart. Screen two, share. So I dropped the signal in my private signal group. You should buy from here. Set your limit. There's even a limit order. I set the limit. Even market almost keep my limit, but I was on the screen that day that I'm going to witness this. And it was exactly the time period I usually look for entry, 7. So market entered there, able to take my position. Then after that, I had market did another quick reaccumulation back here. Then I had my second entry. And I held until we get to this particular high. I still held to this particular high because ideally my this thing was here. My target was this particular high. But I think I saw some nice level on H4 and it's is it H4? Yes, H4. Yeah, so in this particular order block before this sale, I was in the market delivered. So I was able to take on position before Friday accumulation as expected. Because you're able to get expansion during the day, during the week. So there's chances that on Friday you might get markets trying to redistribute. So that was exactly how I took my trade. And that's exactly how I trade. So I'm more interested in higher time frame. So the lower time frame is for precise entry and it's not all the time. Sometimes I take my entries on daily. Sometimes I can just wake up immediately market took this particular low. I'll take in my entry and put my stop loss just right below here. Wait for the expansion because I'm always after candles. So I was anticipating one candle, but eventually I got two. The same thing on the what? GBP USD. So I hope you learn from this. I've explained the fundamental driver for this on my Instagram, right? So, and the post of this trade is on my Instagram too. If you have anything that you want to check again, maybe the execution, the fundamental driver, everything is on my Instagram at I am LPT underscore Forex. Let me type it for us. Sorry. I am LPT. I am LPT in underscore underscore forex. So that is my name on Instagram for those that actually don't know me. Yeah, just see my post for the first time. Do you understand? So that's exactly how I do it, nothing special. Weekly range expansion. Market closer to what? So if you want liquidity, then you anticipate the weekly candle. Then you use the what? Monday, Tuesday as liquidity. You expect the expansion on Tuesday, Wednesday, Thursday. You understand it? So that's all for today. I'll see you guys next time. Have a nice trading week.